Hello, my friends. Rocky Outcrop here, wearing a dashing blue on violet affair to talk about the morning stocks. Here we are. Good morning, Stonkmerica. We are here together yet again to start the day off correctly, doing things right. Smooth operator, operating correctly. Hope you're all doing very, very well. We have, of course, everybody here with us. It's great. It's fantastic to see you all. Is my speaker on? My speaker's not on. Need to turn that on. Not that I get alerts with notifications these days. Anyhow, good to see you, Bad Mama Jamma. Let's go. Let's go indeedy doody, my friend. And look, good to see you as well, Ben. Got Koki. We've got Super Cashy. We've got Jordan. We've got Kieran, Christy, Banana Freeze, and many others. Many others. Hi, Paul says. Hi, Rocky. Hi, Paul. So yes, my timer, it's the wrong. So I zoom. There we go. Got my timer up. Everything's working. Got my blue on blue. and yeah, and I've got the chat window open. I can see everything. Yes, LFG says Sal. So I have a poll up there. It seems like a lot of people in the chat have heard of this Ryan Cohen character. Wonder what he's all about. If you've ever heard of him before, then let me know. Just kidding. Of course, we've all heard of Ryan Cohen. We know him. We know our wee Ryan, our cute wee Ryan. We know him. So today's show is going to be wonderful. News-wise, bit stuck for news. Today's a slow news day, eh? Anyway, Zuki ni Ikoi, eh? Let's go to the moon. Yes. And we are back in the charts. Yes, here I am, back in the chart land, floating in space. Don't know why my sofa keeps appearing behind me there. That's frustrating. Well, how are you all doing? This is the CPNG chart that I have up behind me, and we'll be talking about this today. Is a suggestion that came in from Ms. A. Shout out to Ms. A if you're tuning in later on. I don't see you in the chat just now, so I'm thinking that you'll be catching this one later, and in which case, leave a wee comment down below. In fact, everybody, leave a wee comment. We'd love to see comments down below. I said yesterday, leave a comment with the rock emoji, but of course that's not a real emoji. That's just something from my Discord. Completely forgot that. Instead leave rocket emojis. I want to see rocket emojis. Rocket emojis down below. I think that's rocket : if you're just typing them in. And that's that. This is CPNG. This is a company which is putting in a triple bottom that's had a bit of a rise up. Realistically, if you'd got involved in this stock any time before September, then it was a grotesque mistake. This is and that's where we are. How do we know it's a grotesque mistake, Rocky? Well, you can see that there was a V, right? How many times have we talked about this? These are simple things from technical analysis. Simple things from technical analysis. Some of the fundamentals, if you like, from technical analysis. Fundamentals that not everybody knows, hence why most traders lose money all of the time. There's a statistic out there from trading, something like everyone loses money all the time. You know the statistic. You feel free to make up your own numbers. I think it's something like if you look at some of these sort of trading websites and stuff, they're obliged to tell you some stats. For example, so I think if you were to look at something like Plus 500, one of Europe's most popular CFD trading apps, 80% of their customers go completely bankrupt within 3 months or more, like more than 80%. So that sort of thing. So so these sorts of little fundamental things in technical analysis will serve you very well. Yes, it will serve you very well. So let's take a wee quick look at this thing together. Now, as well, I'll introduce what's going on with these candles over here. In fact, I'll tell you what as well, I'm going to get rid of the RSI stuff off of there. Just pure white candles for everybody on the show. And that's the way it's going to be for the rest of the week. If a Sprocket says JT858, if you don't like it, well, identify the reasons why you don't like it. And by all means, let me know. Because it'd be cool. When Ambo, it'd be cool to know why you don't. And then, excuse me, what you can do is you can identify those reasons why you don't like not having the candles on the chart, and maybe within that identify some of your own biases. Maybe even within that identify some of the issues with not using colored candles, and then actually, mindfully, deliberately improve your ability to read charts, as opposed to just kind of doing the thing that people like to do and human nature kind of leads people to doing, which is simply opening up charts, staring at them, and hoping for the insights to deliver themselves. Instead, what we're doing here is we're challenging your perceptions ever so slightly, and I'm doing it because I know what I'm doing, and you're here because by being around somebody who knows what they're doing, you're improving your skills dramatically on a daily basis. And that's what we do here on the show. So thanks so much for joining me. It's massively appreciated. And here up above my head, you can see that there's this V-shaped effort on the go, but it didn't fully recover, did it? No, it did not. So there's a couple of things that you could do just in terms of measuring the markets between these 2 points where you might have known. Now this, Miz, and it's good to see you in there as well. I see that you're in the chat. How are you doing? This, as you told me, was one of the Wall Street Bets darlings, I suppose. Now, just be aware, look, from the point of view of where this recovery got to, it got up to the 50% line and no more. And we know from some of the most famous people of all time, such as the DJI. Now, what's the DJI? That's the Dow Jones Industrial Index, and that's made up of 2 names, Dow and a fella named Jones. Right? Dow. Who was that? Very famous investor. Much more famous than that Buffett chap is now. Or, similar, but more famous. I'd say probably more, not more famous, but more, in terms of trading, because he's certainly more well known, and in terms of advice and impact on how people's understanding the market, certainly more known, etc. And Dow wrote some articles for the New York. What is it called? Was it New York Times? I think it was the New York Times. Right? No, it wasn't. It was for the Wall Street Journal. And within them, he gave out some of his ideas, which later went on to become known as Dow theory. So, there's that side of things. So that's just the first off. Side of things. And that is, of course, us looking at the logarithmic chart. So let's be fair, Dow didn't look at that too often. What we can also see is that on the linear chart, it only got as high as the 382. So if we flick off that one, here's another sort of reason for why things like 382, 38.2% is a typical fib retrace where you can anticipate, you can plan for potential major pivots. And what do we see here? Well, it went exactly to that line, exactly to that line, but just chuck that one off here as well and show you then where we got to in terms of recovering from this drop down to the move back up again. And you can see from this area over here to this area over here that we didn't manage to actually successfully take out the 886 Fibonacci. This is you can call this rocky theory if you like. This has not been published in the Wall Street Journal, but it's very much well known amongst rocky outcropticians, especially over the last 3 months, where I've mentioned this at least once every 2 weeks, at least, perhaps more than that, probably on average once a week at least. I've mentioned this particular part of the theory over the last few months, where you're looking at a V-shaped recovery, and you've got a guy, right, and you got him standing here on a diving board, right? How many times have you seen this? How many times have you seen this on this show? How many times? So there's your diving board. I've made it a little bit thicker than I normally do. Here's a couple of little arrows to show that the diving board itself likes to bounce around and all the rest of it. Anyway, what this guy did is he went along there and he jumped off. And then at this point here, you've got water. Okay, water. That's water. And what the guy did is he came swimming back up here. Swimming back up. And at this point, he thought to himself, oh shit, I'm drowning. I need to get above the water level or I am totally screwed. That's what he thought at that point, right? Unfortunately for our diving chap, he didn't manage to do that and instead went down a little bit further. So there's all of that. So just some sort of technicals, just some basic fundamentals of understanding a chart for you right here, which will help a lot, especially if you're reading the likes of Wall Street Bets or anything else out there where there's stock tips coming in from people who are primarily pushing their own book, and secondly using analysis such as short interest, where they're mostly going to interpret it wrongly, and also using analysis like well, I don't even know what type of analysis, right? Anyway, this is something, maybe it just caught their attention down here at the bottom. Who knows? Who knows? I don't know, because I certainly don't read it. And if that's the case, then very, very interesting, okay? Because on the way down here, at the very end, this is the 4-hour time frame, at the very end of the downward slope, we start to see bullish divergence come in. Now, was it there before? No, it wasn't. And again, at this point, when we started to trend down the way, there was no warning signs along the way that betting against the downward trend would be wrong. Also, there was no in terms of bigger time frames, like here's the 2-day time frame, you can see quite clearly, quite obviously, the lack of colors on the candles, perhaps making this even easier for you to see. Whoops, just chuck everything out at this point. Everything easier to see, that you've got a high, you've got a low, you've got a lower high, you've got a lower low, you've got a lower high, and you've got a lower low, right? That's so obvious and easy to see. Obvious and easy to see stuff. That's what this is. It's extremely obvious, extremely easy to see. And then when something is so extremely obvious and extremely easy to see, you can bet your bottom dollar that people have seen it. Now, if you're talking to somebody who hasn't seen this extremely obvious, extremely easy to see thing, then you've got to be careful, because that's a clear sign that they don't know what they're talking about. Now, over here on the daily time frame now, we can see down here that again, you know, with regards to these lows, as we were coming in for these lows, that along the way, we didn't really get any bullish divergence. It's actually really on this time frame. Now let me just point out again. Let me just point this out again real quick. You've got a high, a low, lower high, lower low, lower high, and a lower low, right? So you've got all these points: 1, 2, 3, 4, 5, 6. And what we would need to do is look between, if we're looking for in this time frame and looking on this scale, if we're looking for bullish divergence, we are looking between, well, actually, let me just ask the chat. If we're looking for bullish divergence, we're looking between, and here we go. This is a poll coming into the chat. It's tea time with Rocky. No tea, that's fine, have coffee. It's tea time with Rocky. No tea, that's fine, have coffee. Then if you're looking for bullish divergence in this chart, you're looking between points 3 and 5, for example. Let's just see, will that come into my, will it write that in, please, YouTube? 3, 5. Here's another one. Let's call it, for example, 4 to 6. I'll add another couple of options in here just so that people can choose where they would be looking on this chart if they were looking for bullish divergence. Right, 2 and let's call it 5. And one last option. 5 and 6, right? Give that a wee whirl. Bash your answers in, and I'll scroll back up and read that chat that came in from Lepton. A really big appreciation for you, Lepton. Thank you so much. $25. Really, 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 really awesome. That's fantastic. Without, that's half the reason I'm here. I mean, is for that sort of thing. It's really appreciated. Lepton Inc., good morning. Just want to say thank you. No, thank you, Lepton. Really, I mean, we're meeting each other halfway here by for sure. Hope you never get tired of me saying that. I don't think I will. I've seen plenty of other channels here and there, and I must say the content here is well above any other. It's not even close. Thank you, Lepton. Isn't that amazing? Thank you so much. Well, that's really great. So we've got so far we've got answers coming in. People looking between currently the winning answers that people are saying they're looking between 0.5 and 0.6 here. If they're looking for bullish divergence, that's what the current winning answer is, 5 and 6. There are other answers, of course, that are being voted on right now. So you can, of course, take your choice. Good morning, Rocky. Rock. Yes, that's the emoji that I'm looking for. Can people not leave that? Can people not leave that emoji in the comments down below? Thanks, Luke, by the way. How do we get that emoji? Can people not leave that emoji in the comments down below? That's what I wanted to see. Anyway, now we've got a new winner. Points 4 and 6 now starting to win here. Interesting. 0.5 and 6 back in the lead. Wow, this is neck and neck stuff here. I want to see. Can I not see all of the? Show me the answers, YouTube. Ooh, neck and neck. 4 and 6, 5 and 6, neck and neck. 3 and 5 has got 16% of the votes. And 2 and 5 has got 14% of the votes. Don't worry, by the way, people. It's anonymous, right? You don't have to be correct. It's anonymous. You don't have to be correct, right? We've got 44 votes. Let's see how many people are watching right now. There's 96 viewers, right? So there's 44 votes, 96 viewers. That's only half people voted. Like I say, you don't have to be correct. Maybe you can't see 0.4. That might actually make this whole process harder. Sorry, but that was sitting in front of one of the numbers. You don't have to be correct. Okay, you don't have to be correct. It's completely anonymous. I'm going to let it run for another 30 seconds or so, and then we'll get back around and answer that one. Thank you so much for all the rock emojis in there. Loving seeing all the rocks. Thanks so much. Should put this on the outcrop emoji bar. Yes. Why is she not there? What is that emoji anyway? And I said it to people to put it in the comments yesterday. Nobody did, but somebody tried to. Like one person tried to. Shout out to them. Well done. It didn't work. I don't know. I'm not Mr. Emoji over here. I'm not super good with these emojis. Right. Okay. Cool. Well, we've got 55 votes. It's been 2 minutes. I'm going to leave it for another second or another 10 seconds, and then I'll close out the vote, and then we'll chat about it. I'm going to just assume that the other 40-ish people watching either don't have access to the voting button, and that's fine. Don't feel guilty because you didn't take part, and or just simply do not know and don't want to mess up the results. Okay, so I'm going to count this poll as being that. So if for example 40% of people in here think that it's 4 to 6, then the way that I'm going to think about this is that of the 60% of people that voted, 40% think that it's correct, and that the other 40% don't know, which means that there's 40% of people don't know plus 40% of 60, which is let's call it 25. Fuck it, and that's what I'm going to assume. Of the 105 people watching, more than half of the people watching wouldn't know how to do this. That's cool, right? Great, 65 votes. Thanks so much for that. Right, brilliant. Well, we've got the results. The results are in, and well done to the sort of herd immunity aspect of this whole thing here, or whatever. There is a body within the audience that does indeed know what to look for, and well done to all of you. I'm very, 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 very impressed. Way, look at that, Sarah Rustino, quality. Thanks so much for the rocky faces and all that, the rocks and rockets. Hey, KT, good to see you. All right, cool. Thanks so much. Closest rock you can offer, Z. That also works for me as well. Thanks so much. Right, so Yeah, right. Bullish divergence on this chart. 4 to 6, 36% of people said that. 5 to 6 was the other 36%. So that came in neck and neck in the end, ladies and gents. 3 to 5, 13%, 2 to 5. Well, it's obviously down to these ones. It's going to be somewhere in this zone, isn't it? Where we're looking for that. Somewhere in this zone would be where we're looking for that. Let's just go through this. Let's just go through this together, and then, of course, the answer will reveal itself along the way. So, what are the components of bullish divergence? Well, you're looking for a trend, and we've already identified it. I mean, for instance, that's a high, and that's a low, and that's a high, and this is a lower low. So, we've already identified that the prices are operating like this. And we know that that is, of course, a downward trend. That's what a downward trend looks like. And that means that in a downward trend, if you're looking for bullish divergence, that's what you'd be looking for, bullish divergence in a downward trend. Here, let's draw on the prices again, a fake chart again. When you're looking for a bullish divergence in a downward trend, you're looking to the lows. You're looking to the lows in the downward trend. So what's the idea behind this? And it's kind of like, if you can imagine, and maybe just thinking about this from the point of view, instead, thinking about it from this point of view instead of the, because, you know, just thinking about it from the long side, because people who are new to trading find it way easier to think about things from the long side than from the downside. Now, over here, what we have is a trampoline. And on this trampoline, there's a fella. Okay? And this fella is jumping up and down. They're jumping up and down on the trampoline. And we're in the audience, and we're clapping along and saying, well done, fella, jumping up and down, love it. And we can see on his wee face, there's a look of grim consternation. He's really concentrating as he's trying to do it. That's what his wee face looks like when you zoom in on it. He's like, oh, I'm trying hard over here. That's what it's like, right? And he's jumping away, and he's looking for his biggest heights that he can get. And we're over here, and we're charting out the heights that he gets as he jumps up and down. So he's jumping up and down, and we're charting out the heights that he gets. Like, we're just going to follow how he's doing, and we can see that he's doing well. Right? And we know at some point along the way, he's going to get awfully tired and have to stop. We know that. We know that he's bouncing away. He keeps trying to bounce higher, but we know he's a human being. And at some point, he's going to get tired and have to stop. And we're zooming in, and we're looking at his face. And at this point here, right, where he's putting in that first high, we're looking at his face. And it's like this. Okay? Right? Then we get to the next high up here, and we're looking at his face, and it's looking like this. Okay? Then we get to the next high, and we're looking at his face, and it's looking like this. Right? That's us looking at it. And you turn around to me and you say, having me been looking so closely at his face, do you think he'll go higher next time? Do you think he'll go higher next time? And I'm looking at his face, and I'm saying to you, I don't know, man. I think he's probably run out of energy at this point, and that he'll not quite get so high. So that's why we look towards the tops, if you can understand, right? Because we're looking in the way that the trend is going and how well it does throughout those points. And we're using an indicator down below to give us an idea of something behind the scenes. Are we zooming in on the face, you know, as we see it get sort of rosy cheeks, as we see beads of sweat start to fall off his face, you know, along the way. So this would be the first instance, starting to look a bit sad. Second instance, third instance, you know, starting to look really disheveled at that point. So that's the idea. So in this trend over here, where we're looking at the lows, we're looking to the lows to see if there's bullish divergence. Here's a low. Here's a low. Those numbers, again, for people were 4 and 6. You're looking between points 4 and 6 to see if you've got any bullish divergence. What the bullish divergence would mean that the shorties that are trying to short it are putting in all this effort and trying super hard. And you can see that they're trying hard. they're unable to actually keep that momentum going. So while the prices wait, just to be very clear here, by the way, right? Just to be clear here that these faces, this I don't want to distract anybody here. These faces that the guy is putting in, it's while the prices are going up, right? And it's getting worse and worse looking. Like he's getting tireder and tireder. He can't keep it up. He can't keep it up. That's the idea. You're looking at these highs and looking at highs and going, jeepers, creepers, this can't keep it up. And the reason for that is because your oscillator, and I should draw this lower so that you can see. So that's your price there. Your oscillator, meanwhile, is doing this thing. Oops, I should get it to really line up. So it's doing this thing. There's also going up higher. Okay, it's also going up higher. But then there starts to get like that, And throughout these points here, while it's gone higher, you can see that really it's starting to not work out for our wee jumping guy on the trampoline. And at some point, it's going to have to think. This is why it's a big warning sign for us, etc. So over here, we're looking at this and we're looking to see, is it running out of steam on the other thing while it's gone lower? It's gone lower. Is it running out of steam? We bring up our oscillators down below and we can see, well, when we went down here at point number 4, that this is what we got. And over there at point number 4, the face was like, yeah, super big smile. Woo, banana smile on that face over there, right? And then when we came down to this point over here, which is point number 6, at this point here, you've got this unhappy face. It's like, I'm trying over here. I'm trying. This time when I remember when I was down here at point number 4, this is how good I felt. I was all banana smiles. This time over here at point number 6, I remember, it don't feel so great in terms of what we've achieved. So yeah, there you would have your bullish divergence. I hope that kind of at least puts a little bit of something on there to try and help you piece together what's otherwise a bunch of different moving parts and might leave you kind of confused as to what bullish divergence is all about. Generation Ape, Rocky, Outcrop, ladies and gentlemen, thank you so much for that. Really appreciated. So anyhow, at this point here, we've got some bullish divergence between these two major lows in the market on the 24-hour time frame, and that's visible on other time frames as well. We've also got this key components here in this area with regards to how the trend is doing now as well. So let's zoom on down again, 4-hour time frame. Suddenly you get to see a bit more detail in here, but it's not quite so great. We'll go to the 1-hour time frame. Now in the 1-hour time frame, as you can see, a lot more detail on this chart. A lot more detail on this chart here with the 1-hour time frame, so you can make the same comparisons again if you wanted. High, low, high, higher, low, high, for example, here, and then you can bring up this and you can say, look along here. Look along here. How you doing? That this is that down here, your man's face, super big smile. Over here, your man's face, unhappy smile. In terms of the progress towards the downside and how much energy he's got left on his wee trampoline there. Right, so you can see that in more detail. So that's leading us into this zone. And then you can zoom on in here and you can take a look at the actual sort of triple bottom zone that I was talking to. Put a couple of assertions over here. What we have is 3 more or less equal lows, not quite, but there actually is low, lower, and lower here, right? And you've got a couple of highs in the meantime. So on these highs, you'd be looking for the other component, hidden divergence. And then we also have a few other little components to look to. We've got a gap here in the charts, etc. This is bringing us into some real detail on this whole thing overall here, right? So 3 components now. So this is how you would do your charting, right? This is how you do it. This is how you get your broad picture, your narrower picture, etc. You can see here in this zone, you've got those 3 lower lows. You've also got the bullish divergence here again. You can see that there was a flash on the DMI. So we can anticipate that prices might return to that zone. Let's just draw in a vertical line so that we can see where that actual candle came in at. Then we can also zoom in even further, etc. We can analyze these oscillators, but we can see that in terms of studying the RSI, when you're in the overbought zone, this is a key component. In fact, actually, tell you what, I'm going to take 5 minutes as well, or 10 minutes or so for myself at some point the next wee while, as well after I've done this, because this is pretty intense education, right? It's pretty intense. I've kind of duped you into with pictures of people on trampolines and stickmen and all the rest of it, making it seem like it's dead easy, but it's pretty intense, and things are going to just get that next level more understanding just for you, just here. And I tell you what, whether or not if you've been trading for 10 years, you might find this information insightful. If you've been trading for 10 days, you might find this information insightful. But regardless of where you are, who you are in the world, this is the type of expert analysis that you should really be incorporating into your game. Okay, so let's just go with it anyway. When the RSI, how do you use the RSI? This is something I've talked about a few times recently. How do you actually use the RSI? Well, RSI sort of basics for you are to look between 70 or 30 on the RSI. So here is up at 70. This is roughly 70 along about this point. You know, along here. Sorry, along there is roughly 70. Yeah, I got that pretty close. Along here is roughly 30. Shit. Not so close, eh? Wavy hands. Been drinking too much. And when you and essentially, people are going to talk about like 70, very good, 30, very bad. And all that sort of stuff. And then they're going to say that you've got these overbought, oversold territories when you're up very high, etc. Above 70s, overbought and that, whatever. So actually they'll say to you, it's getting up to 70. Oh, great. So the likes of, well, I don't know, amateurs out there, 21-year-old people who actually work in the army and pretend to trade on the internet, for instance, will talk about when the RSI is at 70, how great that is. For example, more experienced people will actually start to look at the 70 zone and call it overbought, oversold, etc. But actually, this is the way that it actually works, right? This is the way that it actually works, because people will benefit from knowing this. When the prices have moved above 65, right? When the prices have moved above 65 on the RSI. In fact, hello friends, this is a wee introduction to the RSI. Hope you like it. It's advanced. When the RSI moves above 65, anticipate it moving towards 80. 80 and above is extremely bullish. If it can sustain itself above 80 and move higher, then you're looking for another high. But at that point, you're then looking to see if the prices continue higher while the RSI does not, because you'll typically see some divergences in around about these areas. It wouldn't be a surprise to see this high in price on the 14th of July being slightly higher than the previous one, etc. if we were to look up. Let's just have a quick look. Oh, look at that. The 14th of July, yes, was high. It wasn't actually higher than the 13th of July, but you can see coming up here, whatever. That's divergent between these 2 points. Actually, no, this is. I just got confusing. People. So I'm going to just start that tiny little bit again, because introducing price action in here when I'm trying to talk about something else, totally besides the point. So let me just go back a second, right? Pretend that last 10 seconds didn't happen. Doesn't matter. Hi friends, quick introduction to the RSI. Super interesting stuff here. Actually, fuck it. Give me a second. Is this thing working? That's working. Right, sweet. So this will make it easier for everybody too. Hi friends, RSI. You've heard about 70 and 30 as being oversold, overbought. You've heard about how to use it when it goes up, it must come down, etc. But doesn't that seem a little bit kind of unsophisticated? Is there actually a better, bigger, more secret and more revealing truth to be known about this thing? Well, actually, there is over here. Let me just kind of spend a minute or two breaking down this little thing for you right here. Bringing up the RSI full screen. I'm in the RSI right now. Call me RSI. My real name's Rocky Outcrop, but call me RSI. Subscribe to my channel, Rocky Outcrop. Right. When the prices of the RSI move above 65, anticipate a move towards the upper area, up towards 80. That's the bullish control zone as I identify it. It's very typical. Look for divergences at the highs, but of course, to see if there's high price action coming in. For example, in this particular chart, while this RSI didn't actually manage to break higher than the previous one, the price action itself did go higher. Once you go above 65, that's what you're looking to, but you're anticipating a potential turnaround before you actually make it into that zone. If you do that, then you're going to call this area between between 50 and 25 or 35, sorry, the overbought or the oversold territory. This will be oversold in here, as opposed to this area that you might have read about in textbooks down here being oversold, because you've just come up to that area. You're looking to try and anticipate a bounce at 35, at which point you're looking to see again, will you get above 65, and so on and so forth. Towards the downside, let's just be clear, movements down below 35, you're looking to see if you get a bounce down towards the 25-20 area, and that is of course extremely bearish, but it's also where that oversold zone is under bearish conditions. At this point, you're looking to see that if whether or not you get a bounce at the neutral line, because between the neutral line and the green area up here, this would then become your overbought territory, as opposed to up here, which is what it says in the textbooks. Then you're looking to see how the prices actually oscillate, knowing that you've got key zones. You've got a key zone here 1, key zone here 2, key zone here 3, key zone here 4, and a key zone here 5. It's actually 5 areas that you're looking to. Number 3 being that neutral line, of course, between the two. That doesn't really change depending on conditions. But if the prices were to move between points 3 and then points 2, i.e. in a bullish movement, if the previous prices had been down at point 5, then what you're looking for is a bounce at point 2, because the zone between 3 and 2 will become overbought at that territory, under those conditions. However, if the prices had bounced at point 4, then you're looking for movements beyond point 2, because this here was previously perhaps then the oversold territory between points 3 and 4, as opposed to lower than point 5. So that's the dynamic there. I know it's very complicated, but let's just look at how that actually plays out on any chart, on any time frame, in various typical ways. As you can see over here, the prices were moving up into that high territory, came down, got their bounce in this region between points 3 and 4, then moved up again. We were checking here at point 2. If we see the movement towards point 1, then we see the prices move on down, and they went down, and they went down, and they actually broke point 4, which changes conditions moving into point 4. If you go below 25, then you're suddenly, what you're looking for is to have the zone between point 3 and point 2 are actually your overbought conditions, as opposed to up here. So you're not looking for a movement the whole way back up. Instead, you're looking for a movement up to this zone, then down, and that's how it goes. If you break into this territory and properly break in, you're looking for a bounce here. And as you can see, over the course then, we've actually got tighter and tighter within this range, and now we're starting to break back into the top end just here, and we're seeing that we're getting support at the lower end. So now what we know is the conditions on the RSI. It's not a question of whether or not they've gone to 70 or 30 or other sort of really kind of naive, well, basic, not naive, just basic implementations of the thing. It's more a case of the fact that it's gone up here above 65, and you're looking then therefore and seeing that it got a bounce here at 35, sorry, and then it started to move back up the way, giving you an idea that you're actually in bullish market conditions. Looking over here, therefore, and seeing that we've got a triple bottom, it gives you an easy enough managed risk point of view. If you actually take out that low over there at 28.98, then that's obviously your risk management. I'm not a financial advisor. None of this is financial advice, and we drew this in earlier on the charts as well as vertical line, because of course we know that there is a flash on the DMI. Have I got that in the right place? No, it's the wrong place. Just this candle just before. Is it? Is this the wrong time frame? That's the 1 hour. 4 hour time frame. Have we got a flash? Nope. Just let me just check down the way. 3 hour time frame. Nope. 2 hour time frame. Load up. Nope. 1 hour time frame. Right. Sound is a pound. Sound is a pound. So here is opening prices. We still haven't done that yet. I was kind of hoping that it would be in the candle before. The the opening price on this candle is in there at 30.22. There's an easy move to be had from there, from the low. I mean, that's very, very small, but you could at least give yourself a zero risk trade at that point by moving your stop and being happy with the result. Aiming target wise up towards seeing, can we get a test of the 200? That would be a equal high with their previous high. So, you know, giving you that opportunity. Of course, we did push up for taking profits. Of course, we did push up above the 40 line in the DMI. By the way, I just changed this over so it's using the standard numbers. We did just push up slightly above 40 on the DMI, typical turnaround place, and we can see that that's happening so far. Markets in chop, this giving us anticipation moving up the way. And that's where we are right now. By the way, for people who are interested, in yesterday's show, I left these volume candles down here, very, very distinctly colored, green and purple, so that you could, or green and blue, so that you, blue and purple, whatever it was, two colors, right? And they both had names and everything. Two different colors, and you could tell by looking at them what the candle up above is. You can still do that. It's a little cheat sheet for people throughout the week. Maybe by the end of the week, I'll actually change both the candles themselves and the volume down below to be in neutral, so you can't tell the difference between either of them, and then continue to do our charting. But right now is a little sort of thing if you do want to have an insight, and that's handy because we need to know where the open and close was on these candles when we're looking at the DMI flash. And of course, we've got that DMI flash coming in there at 30.22. So that's where we are on that one. Shout out to Ms. A. Hope you enjoyed that. A little bit of a detailed look at your one of the things that you requested and some education for everybody in there. Just jumping on over to GME, stock you might have heard of. It's got a chairman of the board called Ryan Cohen. He's this cute guy that likes dogs, which is remarkable in this world that we live in. That is actually the skill set of an incredibly successful CEO. And he's going to bring this dynamic to GameStop and push this up to the moon. I'm actually partly serious there in what I'm saying. It's genuinely this is great. So anyway, over here, what we can see is that we've come back down to an area of support and resistance while we have had a movement outside of this descending broadening wedge. We're anticipating a movement back up towards the 220 zone as a sort of fulcrum of this descending broadening wedge. Of course, we've got profit taking targets, or as I call them, by the way, something that I've not said for quite a while in the show, but I actually call support and resistance lines profit taking targets because it's where other people will be taking profit. And by saying that again and again and again to people who watch along with the show, they finally get into their heads what actually happens at support and resistance lines. By the way, can you guess? Can you guess? That's right, people are taking profits, so I call them profit taking lines. Shock horror. The market's bounced away from this. What possible natural reason could there be for the prices to come precisely to our support and resistance line and then bounce away? And then what precise reason could they possibly had to have come to our support and resistance line and then find support? Well, let's just rephrase that sentence. We can see the prices came up here towards 209, exactly to our profit-taking line before bouncing away down here and finding support at the next profit-taking line. Makes a lot more sense all of a sudden, doesn't it? Remarkable stuff. Well, that's what we have here for us. And we've got here at 199. We know that there is a kind of vague psychological impact of being above $202, seeing the prices at pre-market here at 197.49. So we're not there at the minute. In fact, we're actually just below our previous profit-taking line, or we're just bang on. We're just above our previous profit-taking line. So that's a good place to see the prices. Anticipating with them moving up here, having to then therefore get past the next profit-taking line. Don't worry about the noise there. It's all right. Don't worry about it. Don't worry about it. I'll just have I'll boil the kettle in 2 minutes and have a wee break here. So before we go up to the next profit-taking line, 208, and then the next profit-taking line comes in at around about, the 226 area. We know that the pattern-wise, you could be looking towards the fulcrum, if you like, of this. I mean, that's my own thing, by the way. I call this a fulcrum because I think of this thing as being like a big sort of lever, and that there's a, but actually I don't know what other people call it. Just this apex, I guess, or whatever, the initiation, the inception point, the genesis, whatever the fuck you want to call it. So great, that's where we are, finding support at the 50 simple period moving average on the 1 hour time frame, giving us that little bit of kind of extra kind of hope or whatever you might want to have. Midweek prices coming in here, bearing in mind that we moved down throughout the week so far, towards where we are. Typical kind of Monday, Tuesday, Wednesday behavior here. Then of course what we're looking for is Thursday, Friday, happy days, and that's kind of typical sort of movements as well in markets throughout a 5-day working week stock market type thing. Let's hope that we get that by afternoon today, that we start to have that more positive approach to things. Jumping over to AMC, I'm actually going to leave you, I think, probably while the markets are opening up with just the prices on screen for a couple of minutes and go and have my break then. I don't know. No? What? It's the best part of the show, you think? I don't think so. I actually disagree. Cool. Okay, you can see here over here on AMC prices, they've come back down into the wedge. They actually didn't find support with after the retest of the breakout, and have then moved down towards this lower line of it. Okay, so pre-market prices at 46.18. They've come in. They're looking towards whether or not they fill in that gap down below, and whether or not we operate in fake out territory from this wedge, right? Kettle's just boiling. That's a signal to me that I should go and have that cup of tea and be back before markets open. Back before markets open. Let's get something up. I had that Spotify playlist over there before. I got about 20 or to 40 copyright things against me for having played it. So I knew that Spotify list was complete bollocks. What they do is they make a list on Spotify, try and get honest YouTube creators to use the thing, and then they just put copyright music in it themselves, and they do that as a way of making money because they're not making any money off their music otherwise. So we'll just go on over to another. I'll just go over to another site here and ping up some tunes so that we can see what they're like. Actually, I don't even know if I'll be able to hear them myself, so I'll have no idea if they're any good. In fact, I know that this is all right. This is all right. I'll just stick on one of these songs. I'll stick on. I've got no idea if this one's a good one or not. I'll stick on this one, and that will be something. And I'll get my own speaker working in the meantime. And then I'll check all my super chats and everything else when I come back. I'll be back in 5 minutes for the market's opening. I'll be back in 5 minutes for the market's opening. Who knows if this music will even play, huh? Who even knows? Am I even streaming right now? Better double check that since the music isn't playing. Oh my gosh. Am I even streaming right now? Warning. Well, it still seems to be streaming. Timer, please. Timer, please, Sal. Yes, yes, yes. Thank you, thank you. Okay, it seems to time out every 15 minutes, by the way. So that's kind of a bit of a clue as to when it might have stopped working as well. Thank you. Oh, timer is, oh, it is up on the screen. Yep. Please refresh timer. Also, I'm looking to add to my ETMC position. Can you have a peek, please? Thanks, Rocky. Yes, no problem, Sal. So I'm going to go away in a second. I'll bring up that. What was that EMT? What did you say? I just read it less than a second ago. ETMC. ETMC. Let's have a quick look just real briefly. Woof, big drop down there in that one. So I can see why you might be thinking that in terms of you've got a position looking to add, you're looking for these sorts of pullbacks. That to me looks like it must have been a positive candle. Yes, it was. It was a movement back up the way. Will we consolidate here? Do we need to come back down, retest support at 217 again before moving on up the way? We're at 230 at pre-markets. That's where we closed yesterday. Interesting stuff. We'll come back to the TA on this one and more very, very shortly. I'm just going to leave up, say, our favorite stock here on the screen, GME. In fact, tell you what, I'll double up the screen and put on AMC as well so that you can get a look at how that's getting on the sort of the 5-minute time frame on GME, the 5-minute time frame on AMC. I'm going to take away the pre-market. I'll leave the pre-market thing on there as well so you can see how that's getting on. That's cool. Okay, great, nice one. I'll be back in 5. Stay alive, look sharp. Tell your friends. By the way, it's a good opportunity for everybody to hit the like button and to share this thing on Twitter if you haven't already. Make yourself a cup of tea. I'm going to have one. I'll be back before markets open. I've only got 4 minutes. What is? Oh, my Twitter links to my own show are still broken. Yeah, I know they are. Of course they are. I've not fixed any of that. Great. Yeah, brilliant. Nice one. Excellent. Let's see if I can get this bloody music working. Thanks, man. Doesn't look like the music's going to work. Right, be back in 2 minutes. Right, yo, hi everybody. How's it going? Hope the music's okay. I still can't hear it. Should have turned on my speaker. Forgot to. Or I did. I turned it on, but I let it time out and go off again. No gap on the GME chart here at the start of the day. You can see that the white candles taking away some of that kind of feeling of oh my goodness about the start of the day for us, which is in some ways handy. Of course, we don't really know how these things are going to pan out necessarily right away, but we know that this is obviously negative to have come down here, blah blah blah. But as you can see right now, kind of recovering. It would be flicking into a blue candle right now. Does it really matter to you whether or not this candle ends as a blue or a red candle? It is a candle that gapped down after all anyway. The main consideration at any given time is what is the price? What is the price? And how does that price relate to other prices? Not how does that price relate to the relationship that the other prices had with the previous price. That's not exactly what we're looking at when we're looking at candle colors, or the candles themselves, essentially. So yeah, right, great. That's that side of things. And we can take a look at AMC as well and see how it's getting on with its gap. So obviously this would be a red candle right now. You can tell that because the current price line is down at the bottom of the thing. So like, there you go. You can see that this part is what's moving. This is the body moving down the way. And it does indeed look like it's gone down to try and fill in, to go towards filling in that gap, right? We've left another gap on the charts as we've done it. So this is the tale of two gappies. It was the best of times. It was the worst of times. It was, of course, the tale of two gappies. You can see that there's one gap just here. My fingers don't like showing up when I hold just the one of them up. NVIDIA thing cutting it. So there's a gap just here. And the prices are over there, kind of, you know, looking at it. So that's not super fantastic. Do I anticipate this gap being filled, etc.? Yes, I do, etc. But we're outside of this wedge towards the downside. This is no better. It's not got any better yet. So we've been able to anticipate all of this, and that's just where we are. Yeah, so let me get my music working, then I'll feel chipper as well. And we'll talk about news as well at some point. It's 35 after we've just opened up the markets. We've got the first 5-minute candle just closing off just now for us. That's of course going to be a red candle over there on AMC, and it's obviously going to be it's a red candle here on GME as well at the start, if you care. But I gotta wonder, like, is this having an impact on you? The lack of emotional impact that seeing all these different candle colors would have on you, is that doing that thing? Let's just have a look and see how that plays with regards to the actual colored charts here, just so you can get a wee look at it. There you go. There's your emotions that you're missing out on having while being able to actually look at the prices with an objective eye. And here in the 5-minute time frame for GME, here's those negative emotions that you're not experiencing right now, as a result of trying to be more objective about the prices, in the face of knowing that the prices are below the profit-taking line as before, and therefore people who played this gap then therefore we're taking profit at either this area where the body opened at, or the gap area. And so far that's the opening prices so far on this one. And that there it is, just without that additional thing. You have to do a little bit of looking to find out that information yourself, but once you know it, you've sought that information out. You've not necessarily been exposed to it. At some point in the near future, I'll go back to using colors on my charts, etc. Perhaps, probably. And when we do that, you might have a wee bit more of an objective look at what's actually going on with the charts as a result. How cool is that? I think it's pretty cool. Anyway, so that's what we're doing, right? Yo, cool, excellent. Let me just keep going and try and get my music up, because I want to hear what's going on, if there's anything going on. Anyway, if there's anything going on at all. Still don't actually know. It says on Streamlabs that it's playing. I hope that it's playing something decent and not something awful. I think that playlist is pretty much all right, so it should be okay. Connect. Come on, connect. Come on. Come on, connect now. People did not tune in to see me try and connect my speaker to my computer. Sorry, that didn't work. Please make sure the Bluetooth device is switched on. It is. I swear to you. Turn it off and on again. It's the perennial advice from all technicians out there. Have you tried turning it off and on again? Believe me, I'm about to try that. I fear nothing these days, says Shakar. That's quality. Good to see that. Carissa, here's to being dead inside, my friend. That's really funny. Yeah, I mean, is that a fair description? People who watch my show know that I'm anything but dead inside. I'm very much wear my emotions on my sleeve. You can see it, but I've got an emotion-free ability to look at the charts without being influenced by emotions. I mean, I think if you want to let anybody be a sort of shining light role model to you in terms of emotions and trading, then maybe I could be that guy. You know, I'm not somebody who's afraid of emotions. I'm not somebody who doesn't express them or lives in an emotion in a robotic world. A good portion of every show that I put out is kind of dedicated towards humanity and emotions and stuff like that. But here we are, and somehow I'm able to do this anyway. So maybe that can inspire people out there to be able to think that it is possible to live in a world where you can be a fully emotional person and realize that ability to trade without the emotions as we continue on down towards the anticipated gap fill that we talked about at the start of the show before things really even kicked off. How about that? We're probably doing a pretty good job over here. Now, this negativity that's on the go with GME, it could be described as being the same sort of price action as what you're seeing on an AMC. It could be described as that way. If it were to be considered along those lines, I suppose, then instead of thinking just operating hand in hand, you might be thinking, will we come down and fill in this gap? It's only on the small term time frames, of course. This little gap over here, could that happen? Well, I suppose it could. I'm not really looking to that as being a thing right now, but it's there, so I suppose it's worth acknowledging for everybody who's watching along. I'm very much alive inside, just dead in regard to MOAS. Okay, cool, nice one. Well, there we have it. You've reconciled some emotions there and got a diamond insides. Got your diamond insides now. What now? The timer's broken. Aha. Okay, so I really do need to improve on that timer system. We're back on. It's an hour, so it breaks every 15 minutes. I'll try and make sure that I refresh it more than once every 15 minutes. Come on now. Come on now with this bit connecting to the speaker. It doesn't look like it's going to connect. This is one of these ironic things. I had this happen to me the other day there, right? I use a Bluetooth mouse. And I was all like, oh, I need to turn my Bluetooth off and on again. Well, didn't I go ahead and hit the Bluetooth off button on my computer? And then it was like, uh-oh, my mouse is Bluetooth, my keyboard's Bluetooth. I had to go and find a wired mouse to go and find one. Just to turn the Bluetooth back on again. There's maybe a better solution to that, but I was like, oh god, I've done this to myself. Anyway, I guess I'm leaving the sound off for me today. That's fine. It's fine. No music is my music anyway. That's how I roll. You guys can listen to music And I suppose, let me know if it's Gash. We're hearing music. Weird. Yeah, you guys are. I'm just not. That's the thing. It's playing for you. It's not playing for me. Which means I can't time my TA to the beat of the music, which is something that I like to do. I'll live with it. I'll cope. Crypto. Wait, no, I'm typing crypto in for Bitcoin, BTC, USDT. Let's take a look over here at this one. Wow, this is super interesting. 47,000. Great, nice one. Well, we're glad we looked at crypto over there. If you want me to take a look at closer at the Bitcoin charts and let you know exactly what's going on, then be sure to leave a comment in the comments and let me know. Ask me for it. You ask me for it, then I'll be back and I'll be looking at it. No problem. But instead, what we'll take a look at is THETA USDT. And the reason why we're going to take a look at this one is because we've actually been operating in the THETA markets as a community already. Well, that's strictly not necessarily true. I kind of took the reins on it to get everybody kind of to start thinking about these things again. But hopefully you will, and you'll take part and you'll enjoy it because it's an interesting thing to do. We know that the current prices of THETA are 687.4, and we also know over here on Binance that we have a position. Now, you don't necessarily know that I've made it 73.2 THETA. You don't necessarily know that, and you don't necessarily know that I've done it from an entry price of 629 here, 629, but he's wearing around and involved in this process that we're doing. So it's kind of cool to see that this is currently up $43.82, at 69% up on that position. What was the margin that we would have used on this thing? I don't know. You can work it out. We're up $43. That's a 69% increase. That's pretty cool. So if we wanted to right here, right now, what we'd be able to do would be to just close our position and be in profits overall. But this is kind of the thing that I'll let you decide. So let me know via the messages here, super chats, everything else, whatever, and on the Discord and all that stuff, what you think that we should do with this one, because I'm wanting to know. Let's go back on over here, and you can see quite clearly, by the way, on the charts here, that on this, what is this, the 4-hour time frame, that there's a moving average in here. What moving average is that? It's the 99, the 100 period, essentially the moving average of there. That's right at where the prices have found resistance. Well, we talk about this, Jimmy's talked about this a couple of times on the show recently. You find people that are trading the same way in a cohort of traders. It's kind of interesting to kind of just to look at where the out of the box indicators that are on the Binance chart line up with, just because other people will be looking at that same thing, at the very least, for no other reason simply than that Binance are using them on this chart. It's probably something to be kind of aware of, at least. Here's the THETA chart though, and what we're looking at. Could this be sort of inverted head, a regular head and shoulders that's happening just here? Could it be like slanty Quasimodo? Do we need to be worried about that? You can let me know. Do we need to be worried about this flash that's on the charts? Has that already been filled in? Another thing that you can let me know over here as well with regards to the trade in this one. Another thing is you can let me know is directly if you think that we should take profits on that position, or if we should move or actually put a stop loss on. You'll notice here that there's no stop loss, there's no risk management happening. That's not something that I typically recommend when trading. So you can let me know all what you think about this position over here and how it should be managed. In the meantime, I'm happy to have made back, obviously, all of the $25 that was lost on the account on that bad trade that happened. Is that what happened? Did that happen? Yeah, it did happen the other week there. I told you about it. There, and we're up, what, $18 in profit overall on the account, I suppose you could say, with this position at the minute. I suppose you could say, if you had to. So you're just gonna let me know, but I'm not actually a financial advisor, and I don't want to make decisions in that account, you know, because it would be kind of, on the one hand, slightly immoral and against the rules. So you're just gonna let me know. Anyway, back over to the other charts. To say I don't do crypto technical analysis would be not true. I do crypto technical analysis frequently, all the time. It's 2:45, that is 45 minutes after the hour, so that's pretty cool. And we got a £10 donation there from Chris Sweeney, or £10 super chat I should say. Hi Rocky, when you're free can you take a look at Cardano? I'm using a fib on the 4-hour and looks like it got rejected at the 618. If rejected twice, does this usually indicate a retest at the lower levels? Thanks. Yeah. Quite often it does. Quite often it does give you an early an indication that you'll be moving between these different zones. Let's go take a look then. That's quality. Thanks so much for that. I'm going to assume that you're talking about Cardano versus US dollar. Going to look at the USDT pricing for it over here on Binance. Pretty good liquid exchange. See, they're actually pushing up right now as we're talking about things. So 4-hour time frame, let's just have a look and see how this all lines up. I have stuff floating around on here from Chitter Chatter, which I guess, has this already happened? When did this happen? Did this happen? I mean, I don't know. I never really necessarily know. I guess this was maybe me analyzing it after the moves had happened or something. I don't know. I'll leave that liquidity box on there. It's probably interesting. Don't know where this Fibonacci is drawn in down to. Where was this? There. That's interesting. Anyway, somebody can remind me. Who knows? I can't tell right now if this is analysis that I put on top of price action after it already happened for this section over here, or if I called all of this or not. I can't actually remember off the top of my head. So where's this 4-hour Fibonacci that you were using? Let me just see. So if you're trading on the 4-hour and you're looking at a Fibonacci, then the chances are well, I mean, where you ought to be looking at is from up there down to down here, and it's miles away from the 618. So maybe it's linear that you're looking at or something like that. Sorry, but obviously that'd be less, so that's not it. Just trying to look backwards, Chris. Now the reason why I did that is because that's the extreme market high that happened on the 2nd of September here, which was the $3, you know, the all-time high prices, very significant area. It's clearly visible on the 4-hour chart. You know, it's clearly, you know, these are nice big candles. It's very easy to see all of this information. So that's clearly a high. This movement down here to the low, that's clearly a low. You could be moving using body to body, I suppose, in which case then maybe we're at that zone. So let me just draw this in body to body. You can hear my phone ringing. It's, I wonder who that is. I want to talk to you. I'm doing a live stream. Just leave me alone. Here. If it's some broker, tell them that I'm busy and I don't want to talk to them. Thanks. Right. Just say that I'm busy. Talk later. Yeah. Right. Cool. So here we have thank you. Here we have the so that would be the obvious Fibonacci to be looking to, but you could be looking between bodies to bodies, and that's me trying to draw this in here now and see where that lines up with. And yeah, cool, coming in here, that 618. The 618 is not the actual 618. There is now it's visible, bounced off that. But you said we bounced off it a couple of times. You must be anticipating something from just in here. So I'm going to have to zoom in even more. So you can see that the in terms of the limitations that you're putting on yourself, buddy, as you say that you're trading this on the 4-hour time frame, it's not necessarily that you're taking full advantage of the data that would be available to you on it. So just looking over here as well at that point down to, but you are talking about things that are very crucial in terms of like closures, etc. And then of course you're saying I'm on the 4-hour time frame. I see us bouncing off of it. And what you're saying is that we're not closing above it on a fairly significant time frame. So hats off to you. That's correct. Well done. I can see that there's problems here in terms of like how you've lined all that stuff up, presumably. Right. So anyway, unless you've gone body to body, perhaps on that one, and there's something something you've gone body to body on it, I would probably be more wanting to just go wick to wick. I prefer looking wick to wick. We know there's a couple other things about this zone in terms of how it came down there, in terms of the analysis. I'm not sure if I did it before or after, but it came down to 1618, etc. down there. Other little things that I would be pointing out, of course, as well, are 4-hour time frame, death cross on the 4-hour time frame, 50 simple period moving average lining up perfectly with where the 50% area is on this Fibonacci here. So that's the 50% line that I circled around up there, 50% in here. And this is what we're at, and this is where the 50 simple moving average is. So this is a key area where people would naturally be looking to take profits at. Okie dokes. So that's key. Other things, well, I'm not too sure at the minute why I've drew these lines on. Maybe there also were flashes that got filled or something like that. They got done, so that's cool. Anyway, now instead, like really, where are we? If you are looking at this, well, if we actually can close up above this 50 simple, then I'm anticipating a move up towards the 256 price, where the 200 simple is. That would be the next region to challenge. That's not really, you know, getting in the way. There's nothing getting in the way of that happening in terms of fib levels, etc. Just drawing this back in again, you can see there's nothing getting in the way of that happening. We could go up and try that 618 again, having pushed up above it a couple of times in terms of this logarithmic chart with that particular layout and where that 618 came in at. Over here, we've got a little bit of a lower low, but we've also got a low and a high and a low, and it's like, are we trending up the way? So you're looking, this would be a something, this is something, that's a higher something, that's a higher something, that's a higher something, but this isn't a higher something, so that's a bit frustrating. So then looking at it instead and saying, well, that's the 4-hour time frame, what's it like on the 24-hour time frame? We've got a low and a high and a higher low here just so far. Does that follow in from anything else? We've got, that's convergent over there, so there's not hidden bullish divergence. MACD is this, got some hidden bullish divergence in a sense, but that's between this entire zone, so actually no, that's convergent between this little bit here, so that's that. So yeah, anyway, not too sure. I'm gonna scroll down and see, maybe put in another comment or something in there clarifying in terms of that. Chris Sweeney, cool. Oops, I'm using Wix. No, you should be using Wix. You should be using Wix. So I mean, just as a if you're going to choose between one or the, if you put a gun to my head and said which one can you use, it'd be Wix. If you're using a wick and a body, and you're mixing them up, that's wrong. If we do push down the way here, the natural area to look to for the next area to come in at is going to be $2.20. That's where the 50 simple is on the daily time frame, and it lines up with the 236 Fibonacci, and it'd be where you'd anticipate the prices coming to. Be able to manage this fairly easy in terms of body closures below 238. In terms of wicks down the way. Really, I'm looking at this at sort of 230 in terms of a wick. Then I'm going to anticipate that we come on down to 220 probably, but I don't like looking at things in terms of just ticks past certain prices. It tends to look at things in terms of closure. So in terms of that, I'm more curious about bodies. And then yeah, so where exactly are we right now? So we're just still kicking about at that area, and that obviously we've not moved dramatically in the last 2 minutes, but we're kicking about at that area of the 50%. There's an edge in the market here. If you were trading it from this point, then I wouldn't be wanting to take out the highs of these candles over here. So we're at 248 at the minute. I would probably distinctly be wanting to manage my risk at something like 240, although that would probably also be an entry. So, you know, I'd be really tight on this one at this point here if I was trading it on a smaller term time frame. I was just getting into a position, because look at where we are right now. It's a position of flux. If I was in one already, then I'd be able to manage it with much more loosely. But if I was looking to get into one right here, then, you know, we're not chasing the momentum exactly. We're just kind of like looking to see if we can take a punt off of this, and that's kind of the difference where you are. So I'd manage it a bit tighter off the back of that, with the anticipation of being able to get into it again whenever it's correct and kind of figure itself out. This could this, because of its consolidation factor, because of the fact that this is lower on this time frame, with its closures, and this was higher, then of course you've got this broadening structure. Sorry, not the broadening structure. You've got in this half of this thing, then you could be looking at having a triangle here. So coming up towards the 200 simple to test this would be putting you at the top end of that triangle, and that's why you'd be taking profit at that point. Rather than necessarily looking towards the 618. 618 would just be fake out territory of this sort of structure, if that's where we're looking at. So that's how I'd be managing that in and around about this zone. I hope that's been some help for you, matey, but I'm going to jump back over to the stock charts and see how we're getting on there. That was it was cool that you framed the perspective of looking at it instead of me just doing kind of generic TA on the thing for anybody that was interested in it. I kind of already did a really comprehensive TA yesterday for Cardano, or was it the day before yesterday? Whatever it was, that stuff still probably completely applies. Is it on the one hand I kind of forget what I've talked about, and then on the other hand, I'm quite confident that my technical analysis on it lasts for a couple of days and is really good. Cheeto thinks it's going up. Cheeto thinks it's going up to the 2618. But that's the thing is about where these. So Jimmy's just after reporting to me some chat from the chatter box there. I can see that one myself actually. I have a Cardano hitting a 2618 fib circle on my chart at the minute. So that's what he's saying. It's hitting a fib circle on the chart at the minute. Jimmy's a bigger fan of the fib circle stuff than I am. As you know, I'm quite sort of horizontal in my analysis mostly, and Jimmy's done a video in the past with regards to fib circles, etc. But let's just curious out of this one. Let's just see if we can find this fib circle that you happen to be looking at. Could it be? I mean, it's doubtful given this, but could it be there? Is that exactly where it is? No, maybe it's not doubtful. In fact, where is the 2618 on this one? It's this, so it's a bit far off. Actually, it is doubtful. So not sure, of course, where you drew that into. I'd have drawn it using the same sort of levels. Of course, anyway, around there, same, like, you know, if we were to do what I was talking about before, you'd be hitting off of the 4. I'm just going to leave that for now in terms of looking at fib circles stuff. And what was that? That was very helpful, says somebody. That's cool that it was. Oh my god, yes, we've got a full-fledged band, except I don't play drums. Oh wait, well that's cool that you're talking about that. So, but it's not the Cardano chat. So that's cool. Let me just see what hello Cardano, go baby go. Hey, well yeah, I'm bullish on this one, and I would be trading this towards the top side at the minute, right now, in terms of like right here. And we can see that it has been kind of creeping up a couple of pennies, etc. And I was talking about how I'd managed my trade, you know, fairly tight on myself, though, nevertheless, because this is a profit-taking zone. But I'm targeting 256, essentially. That's where I am right now. Let's just have a quick look and see if there's any flashes right here now that still need to be figured out in terms of these smaller term time frames, because that's something that's popped up recently. It was going mad on Kraken. It's also got the similar sort of layout here on this one. Did that actually get done in the end? Yeah, it got done in the end as well, so that was quite handy. Just a little move. So yeah, right, cool. Anyway, between these two highs, as you can see, very much bearishly divergent, right? So any pullbacks will result in bearish divergence, will result in pullbacks to test down at these lower areas. If I was trading this right now, like I say, it'd be very, very tight on it, because we could be looking up for a move up towards 256, in which case maybe, you know, this has got a slightly different dynamic to it or something like that at some point. But this is precisely what I was talking about in terms of the the dynamic I explained earlier on. You've got a high in here. We came up past the 85 point. We're anticipating perhaps movements higher. We're looking for that movement when it does come in higher to be bearishly divergent. We'll be looking for a correction after that. We'll be then at that point saying that there's a chance you get a turnaround at the neutral line, but it could of course come anywhere into this zone before finding a turnaround. And then if it did, we'd be looking to try and come up by here to test again at least 65. With maybe the chance of going up higher, which will of course inform us of trend or correction in the sort of medium term. And if that were to not happen, us to go below this 25 territory, really actually go 35 territory, really go below 35 and actually, below 225. If you go to the 25 area, then you're kind of saying, hey, look, we won't get higher than the 65. That'll be that territory, and we'll probably try again, lower again, even if it's just a bounce here. And if it bounces there, then it'll be because we're consolidating. And if it goes on further, it's just because we're breaking past these previous areas, probably. And this is the RSI type of idea. So right in here, right now, I'm talking about how I would be bullish in this area. How I would be bullish in this area with regards to what's happening. You can see 249 again, still just kicking about in there. Does it look like it's going to turn around from here? Yes, incredibly, very much so. So I would be sat there saying, well, I'm glad I've moved my thing into profit. If it gets hit, I don't care, right? That's how I'd be looking at that if I was trading this in the short term. Because you see, we're pushing up a bit more. We're pushing up a bit more, but we know the conditions under which we're doing that. And counterintuitively, of course, we would need to see the prices moving up to at least 256 for us to have a chance of just going into this extreme movement where we start trending hard in this time frame. It doesn't look like it's got that in it at the minute. Like that's just the way it is. There's no point in trying to convince yourself of anything otherwise. So here we are back with our white candles again. So in a world where you've got emotions, let's just review. In an emotion world here, 5-minute time frame, this is emotion. Did it? Let's just go back to ADA if it jumped when I was talking about it. That's funny. Great, cool. So you can see, right? So great. So like you can see, this is the challenge of trading, right? So if I was trading this myself right now, I would be similarly emotionally positioned, exactly the same. I would anticipate as to how I'm right now. I'd be talking about it and saying, look, this is confusing. It is hard. This is me making my decision based on these conditions now, as somebody who understands and follows trends, looking at this with the anticipation of if we did pull back at any time, that I'd be able to manage myself out of a position without having to have actually lost anything, and be able to try and maximize this for my hope to get up to 256 right here, right now. This is trading on a 5-minute time frame. I mean, this is the equivalent, of course, like when you're looking at the 24-hour time frame of saying, say this was like $1,000 and this is $2,000, and I'm saying, oh, looking to try and get up to 3,333, and it's taken a while, and people tune in, they're like, where do you think it's going? And I'm like, well, hey, I mean, it could pull back from here, and that like it could. But then what's the difference when you've already got a position, etc., etc., and trying to just kind of show you how that would be. And like, I mean, this is, I don't know. I mean, do you get this anywhere else? I don't know if you get this anywhere else. Maybe you do. Okay, so obviously I'm not trading this right now. I'm not a financial advisor. This is not something that I'm making profit off of. Just so you know, right? Harley Hellcat, could you tell your opinion on BBIG? Yeah, it's got a stupid name. There you go. BBIG. There we go. I think that's a stupid ticker. What do you think? What's your opinion? I've always thought it was a bit laughable. What do you think? I think it's stupid. Anyway, I don't know anything about Vinco Ventures or beyond the fact that they've got a name that I think is kind of silly. Other things, I suppose, that are worth pointing out that I do know about them, they've got hidden bearish divergence on the chart on the RSI right there. They're hitting off of the 40 line on the DMI. That there's a gap down below. No, there's not on this time frame. And this would bloody well need to be bullishly divergent, which it is, thankfully. So that's good. So counterintuitively, again here, you really need to be taking out $9 and moving up to test that 200, or else it's rubbish. So let's go with it and give it the benefit of the doubt and say that it's not rubbish. Instead, as people bought in at that area, theoretically might not have distributed it in this time period where they absolutely could have distributed it fully, and then perhaps bought in at this territory, although it doesn't really look like it from the accumulation distribution, to come up towards this area that we're at right now. This is a 5-minute time frame, so it's like, let's just do something that'll last for a little bit longer instead. So yeah, bullishly convergent on the 15-minute time frame up until that most recent low, which was very much bearishly convergent up until it got bullishly divergent. Groovy. A little crossover here that's resulted in this little bit of kind of Rick and Morty lips here, but that's cool. That's fine. It's crossed over, and we've not broken it back down the way, which is what you want to see. So I would be wanting to be bullish on this for at least a retest of these areas where our prior high was. So that's moving up to around about $9. That's what I'd be looking for. With anticipation, the $10 area, and sinks back down again, then I'd be looking at this like a head and shoulders, at which point we have a range of roughly $12 to $8, $4, 8 to 4. Yeah, so if this does go up towards 9, and that's just natural within its ranges, that's defined for itself, and then pulls back, then I'd be looking at this like a head and shoulders with a neckline in here around about sort of $8, with a move down to around about $4 on that one for a test of that 200 simple moving average. Would be that. We've up here at highs. How do those correspond with each other? Managing to do it without or with bearish divergence. So it looks like it's got it. Yeah, of course it does. It does have it between these two highs. Big movement up there. Really, really just like, really punishing retail here, right? Really punishing retail. Moving up the way somebody else managed to conduct this movement pre-market so that you didn't get to take advantage of it in that sense. Then they've dumped on you ever since, because you probably read articles out there from people that have said that it was a good investment, and then it's gone on down a wee bit, and throughout this period of time you've just been distributed onto. So you know, congrats. And then here you've had it move up again very suddenly in pre-market territory. Is that what it's like, or is it? I mean, it's throughout the day, isn't it? Because this is a 4-hour time frame and that's multiple candles. But by the same token, moved up very quickly again. But this is a bit better in terms of being able to actually be a part of this thing. But let's see how this went. Gapped up on some volume, another good green day thereafter, then gapped up again on a red candle, so you're getting distributed onto in the face of that, distributed onto that one, a little bit of movement, distributed out of it, a little bit of movement, distributed out of it. Yeah. Oh, this is BBIG. I don't even know what company this is. They're called Vinco Ventures. I don't know what the fuck they do. Somebody asked what my opinion was on Vinco Ventures, and my opinion on Vinco Ventures is that they have a stupid name. BBIG. I know nothing about them. Is it something holding Blockbuster? I don't want to touch that. No, Blockbuster's traded as Blockbuster, and they're getting delisted from everything because it's complete toxic shite. And various conspiracy theories to go along with that, but it's just standard because it's what happens to toxic shite over a period of time. You know, worthless toxic shite. So, right, cool. Sky, can you look at ORSTED? They are a front runner to win large green energy tender in China. Oh, they want to look at AMC. Let's just jump over AMC first. Whoa, got too much writing on that screen. I can't see what's going on. It seems, by the way, that we filled in that gap, didn't it? We're at 44 right now. We're at all the fours. We can remove our money symbol from the chart. So that happened. Okay, that happened. We've done it now. So this one here, which is, you know, down at where the 50 simple is, could be where the next test comes in at. It's been negative. It's brought us down to here. We could anticipate the possibility of a move which expresses this sort of a range here as the starting point of our wedge. We could get this sort of a range that happens in this zone here. So let's just say you got something like this happening. You could be looking at prices coming down like this. You could also be looking at the prices going up like this. Still, even at this, in the same way that we're kind of in the fake out territory here, ish. It was very hard to identify fake out territory, as we already talked about, but we were using the 618 as that for us. And then we're still in here, and the fake out territory essentially is going to be that gap fill. It does render this wedge somewhat less useful in the sense of, well, what good was that to you if you're looking at this beyond this movement and this movement? Unfortunately, that movement at the end of the week was one that was a max pain movement type thing that moved it beyond max pain, which meant that everybody felt like there was something to be read into that, which there wasn't really. And then this is where we are right now. So it's worth kind of just asking the question, like, was this not really a wedge? It was a failed wedge in a sense. Let's review here. Now, I talk about seeing divergences whenever there's a wedge, something to confirm that there's a wedge. You'll see divergences. We certainly did have bearish divergences here. You can just kind of draw this in. The scaling of the chart changes as in such a way that when I make the MACD full screen, it's hard to see, and I can anticipate that. So I'll just do this so you can see in this region here is where I'm drawing this in from. That there was, throughout that period, there was that divergence. What we've got at this point here with the fake out move, this is what's taken us outside of the fake out move, is of course is of course a hidden bullish divergence until such times as you've taken out that low over there, until such times as you've gone down below 40. then you've got or so, then you've got hidden bullish divergence on the go. So you could come down and test this 50 simple and have hidden bullish divergence to run with afterwards. This was a wedge, it was, and I'll stand by that. But there was, but you can also look at this now, of course, as a sort of the classic thing that I talk about, which is that a failed wedge becomes a parallel channel. Of course, you could then make the argument that we've moved outside of that just now, and this is what we're waiting to see resolve. This is the resolution that we're looking for. And then you could also say, well, then maybe if that's the case, is this accurate? Is it something that's more like this? In which case, you would be able to come down and fill in this gap here, lower down gap, as part of kind of just the range that we've got here. If you look at it, if you were to draw it in using wicks, for example, those two wicks there, I'd put that in like that. You could use, well, I'm not going to mess around too much with the top side. So you could be looking at it like that. You could be, that'd be all the different perspectives that are on the market at the minute. I'm happy enough to just kind of stick around with mine that we've covered in this gap so far. That movements back up that get positivity at this point could then, of course, be traded towards the top side if that was the case. We're just diamond handing this thing anyway. But you could be looking to trade this towards the top side just in case. We have left a gap above us as well, so I'd be looking to anticipating like how are we going to actually respond when we get to that gap, because that's going to be key for us. And then you know, that's the story. What was it? The two stocks that you said? Could I take a look at something and something else? There was something else. There was AMC and then some other one. Oh yeah, no, the BBIG. I was going to. Somebody asked me to take a look at something called ORSTED. That was what I was going to do. So ORSTED. I've never heard of it either. I don't think this looks like a Norwegian stock. That's pretty cool. No, it's green. We're going to make it a green tender in China. Is there a Chinese one? Maybe they're a Norwegian energy company that's going to get a thing in China. The person's saying, I don't know. Yeah. Don't really care about their contracts in China. No, like I good news, all that stuff, that's good and everything, but I just look at charts. I try to show people that that's what you do. If they get a big contract in China, then fantastic. China's economy at the same time goes down the drain and everything else, and who knows exactly how great anything of it is. It's longer term stuff. We're looking to trade things within this zones that we're at. We're below the 236 currently. Of course, these two crossed over. They got a retest, a solid retest of both of them at the time that they crossed, moved up. 50 simple was our friend for a while, then it stopped being our friend pretty rapidly. The 200 simple looked like it would be our friend for a while. It stopped being our friend pretty rapidly as well. A 24-hour time frame showing us that there was this death cross over here that we've actually gone up, retested the 200 simple and back down below the 50 on this one as well. So like that's great and everything, but this here did have a bullishly divergent low on it, which is great and everything, because, you know, realistically from this low it took us all the way up for a 382, nearly as high as the 50% Fibonacci retracement. What's it look like on linear? Yeah, I went all the way up to the 382 Fibonacci, just, you know, a wee bit higher, then before it turned down the way. So, you know, that's not so great. Now that means how far have we come down here, and is this golden pocket sort of retrace that we've had so far going to be sufficient under these circumstances or not? Is this golden pocket retrace? So like at some point you're going to want to be able to get to be good enough at looking at charts that you don't actually have to draw this on necessarily all the time to see that we've come in exactly to the golden pocket. You don't want to have to, but that doesn't happen overnight, obviously. But you want to be able to look at this and think, well, where are we? You know, how are all these things fitting together? Obviously operating down the way here with a slight increase in the negative volume as well as it's gone on along the way. Nice potential for sort of like support in here with, of course, this previous wick down the way and us matching that again here. So nice area for a potential turnaround. Easy to manage your risk on it, because if we take out this wick here, then we take out this wick here, which means we take out our support, which happens to be ding 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 on the 618 golden pocket area. So you've got that sort of built-in confluence here on that front. And then you would be looking to your other Fibonacci levels. And just like, you know, this would be coming in for a triple bottom if it went the whole way down here. So you'd be looking at 866, 850, or actually 840, and then 820. And we're here at the minute at 900-ish region, 899. So the 900, so you know, how would you anticipate managing risk on this one if you were looking to go long and you were just taking long positions, thinking I've got an edge in this market? Would you be wanting to see something like this? Would you really? Because the market, of course, what the people recommend is that you go for something like a 1.5 to 1. I watched an interview between two traders recently where somebody said, "Yeah, your risk is twice your reward. That's great." And I was like, "What are you talking about, mate?" And that, I know he said your reward is half your risk. That's really great. You know, you're taking profits early. Your reward is half your risk. Well, what would that look like on this thing? That would look like a trade that looked like this. And no offense to the guy doing it, because it was well done to him and everything for trading, but this is laughable. You know, this is a loser trader in the long run. And the guy giving him that advice or that praise was talking shite. If you were to be looking at this thing and thinking, well, I want to have at least a 1-to-1 risk reward, then you have to push it beyond the next Fibonacci level. That seems a bit much to ask, doesn't it? Then if you're looking for a 1.5 to 1, then you have to go all the way up towards what, $950. And sure, that would be coming in here, but it'd be coming in a slightly higher high. You know, just risk, like just thinking, well, what if we put in a lower high? You know, we don't actually achieve that. What happens then, etc. Always shaving off of that. So why would you do that? Besides knowing that this is a potential turnaround anyway, that if you did get stopped out in this region, it'd be one of those trades that maybe typifies the type of thing that happens in your trading account currently, where you look at the prices and you see, oh my goodness, they turned around at my stop point. If I just had the patience to wait. Well, what if you don't have the patience to wait and you're looking to trade off the back of the information that you've actually got right here? Well, you could manage your risk just like this instead, which means with the most minuscule of movements, you've got your 1.5 to 1, the most minuscule of movements, so much more sensible. What with your movement towards the 382, you're getting a 5 to 1 risk to reward trade, and that's something that I talk about on the channel all the time. Is something that I look for. So here we have it. This is the GME prices. We're still kicking around about our resistance line, our support line. You know, it changes so frequently that when we talk about it, that you could just think that you could call this that we're at that profit taking line, just even for brevity's sake. So we're at that profit taking line and we're looking up towards the next profit taking line, and we're aware that $200 itself isn't necessarily anything any more than a psychological level. What happens to the psychological impact of being told that somebody loves you while at the same time they're running around cheating on you with every other person in town? Well, that feeling of being told you loved wears off rather quickly. What happens with the prices of the psychological level of $200 whenever the prices bounce around it all the time? Absence makes the heart grow fonder with psychological numbers. Just remember that one. So here we are, and we're looking up instead of $200 as a celebratory factor, we're really looking up. Over the last couple of days, I've been talking about how we're looking up towards $202, $203. It's like that's where we need to get up and push up above. Still the case, essentially on this one, and we're doing absolutely fine. You know, to be perfectly honest, we're doing absolutely fine over here. AMC pricing still doing all right. You know, in at 44.44. Again, you want to manage your risk appropriately. You want to do it your way. You do it your way. I've already laid out essentially what we're looking to on this one. Analyzing it on a small time frame now at this point is where, of course, all the sort of the fun part happens. You know, and it's like, to be honest with you, the audience would be bigger. Of course, you know this yourself. Like, while you listen along and get a lot out of it, you know that there'd be more people listening along with you here right now if I was doing this sort of thing on a regular basis, just looking down at the very small time frames. But I've already described it in such a massive amount of detail that really just it's up to you. If you want to manage your risk with a trade back up towards filling in this gap, for example, you would know how to do that. But again, you know, I'm not even talking to people with AMC or GME like traders. I'm talking to them like traders, but I'm not telling them to trade this stuff. I'm just telling you where we are right now. it's just it's unfortunate because I know that a lot of people out there that listen along play options stuff at the same time live on what we're talking about with these two stocks and all the rest of it, and all that. So that's it. Anyway, if you want to be able to do that, you can do that, no problem. We've already analyzed everything around it. Here's the GME pricing, and like, while I could have the 5-minute time frame on, and we could talk at length about, you know, the battle for 197, and I'd enjoy doing that. And I've done that sort of thing in the past, and we could be like, oh, we're coming in here with the potential for a cross. It's more than the battle for this. We need to take out these moving averages, or else we're going to get a death cross. Can we avoid it? This is the story for the day, and I could hype it up and do it all day, and it'd be great and everything. Instead, what I've tried to do throughout today's show is to deliver magnitudes of resources for you to be able to actually rely upon and become a highly profitable, successful, consistent, independent trader. And, you know, that's what I'm all about over here. So I'd really appreciate it if you could help me grow and everything else here as well. Because if you tell your friends, etc., about what we've got on the go here before, you know, you yourself, you know, advance so much in your own trading that you watch on a lesser basis, then that would be really good, because your stats eventually will become negative stats for me if you do that. If you tune in just to say hi and then go away again, you've come along for enough time to leave some watch time and make it so that YouTube thinks that people don't actually like it. You know, you tuning in to say hi and hi, just dropping in to say hi, much love, going to go away off, actually damages my YouTube channel, you know. So if you could bring some friends along and teach them too, that would be quite good. And if you do decide, just don't come back, eh? Stefan, Rocket Crop, how long until USA feels effects from EverGrande? Do you think this can domino effect in MOAS? Yeah, well, you know, I mean, yes, it can. But like, but you know, don't forget the question that you asked me, which was, do you think this can domino effect to MOAS? So when I say yes, I'm saying that yes to your question, domino effect, as in other stuff would need to happen. We should also need other stuff to happen thereafter. We should also need other stuff to happen thereafter. And really, you know, this whole thing is going to be looked back at some point and say, some people will anticipate the domino effect stuff, or whatever. Or some people will talk about it as if they anticipate it after the fact, and we can talk about it and whatever, but it's always going to be like, when do you draw your lines on the timeline of life? I mean, where did it start? Did it start in 2008? For a lot of us it did. Anyway, the EverGrande thing, how long will it take to bleed into the economy? I don't know. It's going to have big impacts. Of course, it has impacts on the systemic risk inside the Chinese economy, which mean that they would have, of course, crunch on their liquidity. And of course, while America is the reserve currency of the world, China is the reserve debt of the world. Even though America's got the debt is macroeconomic stuff, right? And China having a poor economy these days does lead to greater sort of needs to either inflate or speed up the velocity of the money in your economy to keep things ticking over. So yeah, essentially I would say that it's got massive global implications. Of course it does. I wonder how China will manage it. With a strong history of making it up as they go along, they might just be all right. Over here, we're at $200, so we can see on the GME prices that if I wanted to hype up the excitement right now, I'd be talking about that $200, but we've been through this already, so we know. So now that we see that the prices hit $200 and kind of backed away a little bit, come to that 50 simple moving average, sit here, contemplate, run out that 30 seconds on the clock, see how we do in the next 5 minutes, is what you would anticipate. So like, now we've got this kind of familiarity with the markets, and we can see these things happening. We can see that it would be like me acting like some sort of payaso if I were to actually try to commentate on what's happening right here, right now, you know. So instead of just giving you the information so that you can do it yourself, right? Which is better, I think. It's better. Yeah, if people do that and that, but I can't tell people that because it gets terms of service. But you know, if you were to tell people, you know, the things about how to do stuff like that, you know, people can leave it on. If you can't watch with your eyes, you could leave it playing and maybe have the audio going and that. And if you can't hear it or vice versa. And you could figure out those things because those wouldn't be damaging to my stats. Now I can tell people that. I can tell people it wouldn't be damaging to my stats, but I can't tell them what they would do. You'd need to maybe infer that yourselves. So, TradeSpotting says Harley Hellcat, hope to hear some killer music today for GME. Love tuning in and hearing the music, buddy. Yeah. I might have to start playing some better music as well myself on that. Jimmy's music is great. There are some great clips in the stream today. Really, Smug Slug? That's super awesome. Thanks so much for that. Sarah Restino says, my dad is recovering from heart surgery. If I played Rocky's stream for him in the morning, he wouldn't be able to escape. Brilliant. There you go. Handcuff him as well, so that, you know, and that. Oh, Jess. I was thinking I'd stop music. Whoa. Is Harley Hellcat called Jess? Is that what's going on there? Harley Hellcat, you come in here, you talk away, and I don't even know your name. What is this? What is this? That's cool if that's what that is. Is that who that is? Jess. Who's Jess? Oh, did you say? Oh, jeez. Oh, jeez. I thought you were calling somebody Jess. Ha, there you go, eh? I just don't understand. I just don't understand anything. That's what it is. Kieran Norman, but then we will also be the biggest. Yes, the biggest. Rocks and rocks and rocks. Sarah Restino, wish you the best for your pops. Indeed, I do too, by the way. I hope he's doing well. Hope he's doing well. Aye, good luck, mate, if you are watching, by the way. Good name. We love it. We love the wrist eye noses in here, so we do very much. Right. So yeah, shall we take a quick look at AMC again? By the way, reminder to folk, I'm tuning out in 2 minutes 30 seconds. That's right, 2 minutes and 30 seconds. If you want me to take a look at any other stocks, etc., then I won't be able to. But if you and all that sort of jazz, because we're running out of time now. GME, it's kicking around about, or AMC, it's 45.34. Great, did that gap, did this movement up the way. I wonder if there's going to be any implications from any of these lines that we've drawn on the charts. It'd be interesting to see if they were. It'd also be interesting to see if there's implications from this, from that wedge that's on there. So remember, just going back the way there, that was a good little clip about how to anticipate movements in the markets and what you would be doing. Looking at ORSTED, the company that seems to be Norwegian or something like that, but it's got a contract in China perhaps. Then we were talking here on AMC about various different things with regards to the dynamics of that wedge. I've just hit the undo button enough times to come back here so I can pop this back to where we were. I'll delete the measured move aspect of it. Just wanted to leave the wedge on, go back to where we were. If and remind people what we've done over the last 10 minutes of the show here. FU Money says, fine, leave us then. I'll be leaving yous. So let me just do the reverse roll call and all that stuff. Go back up to the big screen. It's important that people get used to the idea that I can only be on here for so long. You know, my time is actually extremely valuable. If I want to go and enjoy a cup of tea with my mum and do the best show possible, then it means I tune out. If I want to do a half-assed show that ends at sloppy times, then who did? I didn't. You give somebody a hard. I didn't give anybody a hard time. Who? Oh, that's funny. So Ken wanted to take a look at something. Let's just look up the way here. Ken Rexfields. Looking for your name. Good to see you, Ken. It's nice to see people here. By the way, for people who are wondering, I let anybody chat in the chat today. I put it to anybody instead of thingy. Not seen a massive amount more people chatting. If you have come in here though, then do consider hitting that subscribe button. I'm talking to the likes of yourself, Neon Rave, and Ken. Ken, hi, please do the TA charting for BB and ATOS. I'm a big bag holder for both of them. Bought BB at 19, ATOS at 4.3. BB, has it filled in the flash on the gap? Nope, still on its way down there, mate. Sorry. Is that $10 at the minute though? I did say it would go down to 10.13. Oh wait, has it done it? It's done it. Has it done it? That one was done. That's for it. Like, just wait a second here. Sorry, mate. I don't want to be spending too much time celebrating my own awesomeness, but it's worth doing. There we go. Another fantastic success story for the Rocky Outcrop DMI indicator yet again, anticipating this movement down to 10.13. Well done, everybody. I'm sorry, Ken. Like I say, hit subscribe. You know, if you'd done that a month ago, you wouldn't be in this situation now. I'm not a financial advisor. I'm just saying that the reason that you wouldn't be in it, not because of my financial advice, but because of the phenomenal education that we do on the channel here, you'd not be experiencing that. And the other one that you asked for was ATOS. Now, I'm afraid, buddy, I'm not actually going to do the technical analysis because I wasn't joking. I am actually tuning out. ATOS here, still below the 236. Got a nice movement up the way. Looking for hopefully something not yet. Okay, that's happened already. Stochastics. Would they be able to turn around now? Yeah, a test of the 200 simple would still result in a higher low. We've got hidden bullish divergence until such times as we take out that 200 simple. Look at the daily time frame. That's for the 200 simple. For the short term move, taking out that there means we probably will go down to 260s. You know, that would be a 20% move from where we are now. So you'd be wanting to manage it around about there. Things start to get a hell of a lot more positive if we take out the 200 simple moving average on the 4-hour time frame. So your bearish case scenario, look towards the 200 simple on the daily, and your bullish case scenario, look towards the 200 simple on the 4-hour time frame. In the meantime, right now, all right, okay, I can't afford to do any more time than that. That's all I have time for. Thank you. In fact, you didn't even get to see the charts. I'll just put them on for a second because I didn't mean to do it so badly. Here's the that second one, whatever it's called again, ATOS. What's that again? ATOSA Therapeutics. ATOSA Therapeutics. I went to see the therapist the other day. Yeah, was it any good? Turned out it was ATOSA. So yeah, anyway, this is what I was saying here. Looking at the positive case scenario, you're looking to take out that 200 simple in the 4-hour time frame. We're currently below the 50. This is the potential to move up the way could exploit some of these potential gains of hidden bullish divergence if it doesn't take out lows here, with saying that really, this was our last low and everything in between was flux, and that we could kind of dismiss the fact that this is actually bearish convergence, mostly based off the fact, of course, that we've got this in-between higher high on the charts over there. Looking to take out the 236 and the 200 simple. Those are both profit-taking targets if you're wanting to trend towards the top side. And in terms of maintenance of the trend, staying above the 200 simple in the daily time frame here on this one is going to be key for you. Over there on BB, BlackBerry, not Bollinger Bands, if it loads up, which it might not really that bothered. We got a flash on the DMI recently. It was one of the this is going to be a hard one to fill. Let's see if it does it and anticipate it. Didn't really bother doing any other TA than that, and it predicted the market perfectly yet again with this flash that came in here at the 213 price point, and we did it. We totally knocked it out of the park, as we did with today's show. It's 3:33 at the minute. That means I probably also got my timer things probably also frozen, but there you have it. It's back on. And it's time for me to go. Much love to everybody. I really do appreciate everybody for tuning in. I really do. And I'm going to do my reverse roll call just now, as I always have done. And I'll bring up my thing now. It's not as good as it was whenever I had Streamlabs working. And I'll get my alerts working at some point. I'm sure I will. Get the F out of here, says Supernova. I'm about to, mate. Thanks so much for that one. And for your SGD5, whatever SGD is. Thanks so much. I should... wait a minute. Okay, great. Thanks so much for that, mate. Ken Rexfields, also with SGD5. If you two know each other and all that, then appreciated. Thanks so much for bringing along a friend. If not, then your countrymen, between the two of you, I'm sure you can bring another SGD person here to the show at some point, right? We can do it. We can grow here. It's really good stuff. Wilfric Doomslayer, thanks so much. When Crotchcam, you're the feisty goat, Wilfric. Feisty goat, thanks so much to you as well. Hi, Rocky, AC, Air Canada, Bollocks. Should have looked at that 17 minutes ago. Sorry, man. Missed out on that one. That would have been time for that. Let's just see. June 29 stream for those that want to see the call. Oh, that was me. Good time to revisit your genius. Oh, brilliant. If it's just a matter of patting myself on the back, let's go take a quick look at Air Canada. AC, Air Canada exchange traded on that Canadian exchange, EOLA over there. Brilliant, excellent. Well, we're at 22.35. This is some sort of form of genius for me. I'm super glad. Can't see my drawings on there. Must have deleted them all though, so I was hoping I'd have got something really brilliant to give me a quick satisfaction. Thanks so much, man. I'll check that June 29 stream sometime. Jen Campbell, beautiful, wonderful woman. Thank you so much for being here. Just wanted to let you know how much we all appreciate you, Rocky. Love you, love you too. Love you back. Thank you so much. The idea that you would cancel a call to talk to me in the or to be here with us in the morning is super amazing. Thank you so much. People like yourselves that make this community a wonderful place as well. Chris Sweeney, yourself, thank you so much. Dan Lesage, thanks for that lucky fiver earlier on. Sally Mander, Sal, you're such a great time, such a great person. Thank you so much for doing chapters, etc. recently and reminding me about the thingy-jiggy. That's it for the super chats today. That's it for super chats today. Big shout out to Apple Blossom. Kellen, thank you for all your hard work and for giving us a place to call home. Much love to you. Kellen, Apple Blossom, much love to you as well. Thank you so much. Really do. Really thank you. Generation Ape as well. Thank you as well. Everybody, really thank you very much. Super appreciated. I'll see you all in the Discord at some point. Really do. Fantastic. Love you all. The best people ever.